There was a convergence of factors that is shaking the bull thesis in stocks this week and may hand the market a bruising. There were big losses on the Dow, the Nasdaq, and the S&P 500. The selloffs marked the biggest plunges for the major indices since October. The session staggered out of the gate on Wednesday with two issues weighing on the markets. First, the Fed downshifted the assessment of the economy by acknowledging the worsening public health situation and the slowing pace of the recovery. And for now, that means the reflationary trade might be delayed. The other component to the sell-off is the absurdity unfolding in super speculative stocks. Shares of AMC exploded 300% by the close of trading. GameStop shares spiked another 134%, taking its 5-day gain to 766%. And Koss Corporation saw its stock rocket 408%. Koss is now up 1,358% in 5 days. If you haven't been paying attention, there's a concerted attack on short sellers in the market. As for me, I'm quite delighted watching the batshit craziness from the sidelines. But remember, if the short sellers are forced to cover their bets, which may include leverage, they need to go to their liquid holdings to sell. So, could this be a sign of a top in the market? Well, let's take a look at the craziness. How insane was today's market action? It may well have been one of the most insane days in history, and here are 3 indicators to demonstrate it. The first chart shows the volume on the Nasdaq was off the charts, hitting 11 billion shares. Remember, that's with Nasdaq stock prices at all-time highs. This is more than double the 4.3 billion share average and almost 50% higher than the previous record day it hit earlier this month. And in case the share volume wasn't enough, here's a chart of total call options traded. At 38 million, it was the busiest day ever for call trading. But to be fair, look there at the early part of 2020. From that point on, this has been going up parabolic. And so that brings us to our last chart here, the chart of the volatility index. And in the upper left, you can see the sign using stockcharts.com is $VIX. And we've talked about this many, many times. The fact that the VIX has been hovering above that 20 level has been dangerous. More recently, it's near the level of 22. And as you can see down here in the lower portion of the chart, this is the MAC. From that low there in December, it's worked its way up here to the 0 line. And you know, once it gets toward that 0 line, anything can happen. And that's exactly what happened. We had a parabolic move in the last couple of days here in the MAC. You see the results there in the price chart. And then also up here in the upper level, this is the RSI. You can see that it was hovering around the 50 or midline. And then, of course, it popped up. Now, it's at 75.06. You go back here to this point or back here to this point, and it didn't stay up there very long. It was only up there a day or two and then started to calm down. Well, we'll have to wait and see what happens. Hopefully it calms down, but it could be the beginning. So, as usual, be cautious, be patient, be prudent. And for today, that's ChewDog Charts. Thank you.